Hello everyone, my name is Brooke and today we're going to have a look at some adjusting journal entries to see if we can give you a better understanding of them. So we'll start off with a bit of background information. So as you know, there's two methods for recording revenues and expenses. There's the cash basis and the accrual basis. So today we're just going to concentrate on the accrual basis because it's the reasoning behind adjusting journal entries. So the accrual basis records revenues when they are earned and records expenses when they are incurred. So what are adjusting journal entries? They're entries in the general journal and they record deferred revenues, which is when cash is received before the revenue is earned, accrued revenues, which is when the revenue is earned before the cash is received, deferred expenses, when cash is paid before the resource is used, and accrued expenses, when the resource is used before the cash is paid. So why are they needed? Firstly, they ensure that revenues and expenses are recorded properly in accordance with the accrual method. And secondly, they ensure that cash records match with the earning of revenue and the incurrence of expenses. So there's a few things you need to remember with adjusting journal entries. They're prepared after the trial balance, the debit and credit must be equal, and there's always two accounts affected, and the cash account is never affected. So before you start your adjusting entry, there's 4 things you need to consider. Firstly, the type of entry, the two accounts affected, the time period, and the amount. So the process of adjusting entries. Firstly, you record the adjusting entry, you post it to the ledger, and you prepare the adjusted trial balance. So let's have a look at an example. This one's of a deferred expense. So the question says, on the 1st of March, a company purchases 12 months of rent for $24,000, and it needs you to prepare the adjusting entry for March 31st. So we'll have a look at the initial entry. So for the 1st of March, they've debited prepaid rent $24,000 and credited cash for $24,000. So we'll go back and look at the 4 things you need to consider before you start your entry. So firstly, we've got the type of entry. This one's a deferred expense. The two accounts affected is the rent expense and the prepaid rent. The time period is 1 month and the amount is $2,000. So we'll take a look at the initial journal entry again, and below that the adjusting journal entry, which is for March 31st, debiting rent expense $2,000 and crediting prepaid rent $2,000. That's all I've got time for today. Hope that's helped you a bit with your adjusting journal entries.